Hey everyone, this is Pedro here, and you are looking at DAX chart during this morning during the London session. And this is the 2 minute time frame that you know that I like to trade and my main time frame to trade. As you can see here, when the volumes increased a lot based on what they were doing previously, this was when the London session opened, and this was the candle of the open. Actually not. Let me remove it. This was the candle of the open, and it made a nice drop to the downside. After this drop, after this kind of ignition to the downside, I would expect to have a pullback, a smooth pullback, in order to short somewhere around this zone and try to catch a trade that would break the previous low and trying to close it after breaking this previous low. But as you can see, what happened actually is that after this drop to the downside, there was a huge green reaction to the upside. And when I see these huge green reactions, you can see this big green candle here. This shows a lot of strength, and we never want to go against a lot of strength. And actually, there was no sell entry after this. The price just kept on going up, 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 and crossed my moving averages to the upside. But if there was a short opportunity here, imagine that we had a red candle at this zone coming from the moving averages, something like this. It's not very beautiful, but you get what I mean, I think. And if this candle broke the low of this green candle, guess what I would do? Nothing. Nothing. This is not an entry for me. You can see that from other videos that I go low when I see red deleting green, but this here was not an entry for me. And why? Because it was fighting a lot of green that came to the upside. This was a lot of strength to the upside, and I will never fight this. I never fight this because this kind of candles, this kind of strength tend to throw the price to the other side. So this would be, there was no entry here again, but if there was an entry, a pullback that pointing to the downside here, it would not be an entry for me. I was not trading here yet. I only arrived to the trading chat room somewhere around this time here. And I saw that the price after these moves, after these solid moves, the price was just ranging and making very small movements. Small movements to the upside, small movements to the downside, small movements to the upside and to the downside. And it was not taking over to somewhere, it was just here sideways, trapped between moving averages and inside a range that was completely sideways, going up and down, up and down. And I don't like to trade like this. When the price is ranging, there's actually nothing to do. It's better to wait for the price to break either to the upside and then go with the trend, or break to the downside and then go with that trend too. And that's what I did. I waited, I patiently waited, I took some coffees, because when the price is like this, you tend to start falling asleep and there's nothing to do. And the coffee definitely helps you to wait for these boring mornings that we sometimes have. But my wait was worth, because look what happened after this. The price kept going and then boom! It broke this range. You saw that the price was ranging here, up and down, up and down, up and down, and then it broke the range. This was the first candle that broke the range, and the price started making a good downtrend to the downside. Of course, downtrend is to the downside, I guess. And here it could be a good sell opportunity, selling this break of this candle that broke the range to the downside. This can be a good ignition to start a trend to the downside. I didn't take it, and here there was another good opportunity, although it's hidden because it's inside the 1 minute time frame, and I can show you the 1 minute time frame what happened there. Okay, this was that zone. Let me, I put just a square like this. Do you see here this stop, this small pin bar here, and then this red candle there? If we go to the 1 minute time frame, and sometimes I go to the 1 minute time frame, especially when the price is going down very quickly, when it's making a very fast trend, we can catch some good setups on the 1 minute time frame. And this one, this could be, you can see that the price tried to go up, and then these red candles deleted this previous green candle. So this was a red move that deleted the previous green move, and this could be a good entry to short the market. But I didn't short this. I didn't short this because, well, I was chatting with someone and I didn't see the opportunity. And when the market is crashing, the best thing that you can do is to go and chat with someone and forget about the charts. But I didn't take this short here. But there's no problem because we always have more opportunities as long as we wait for them. But here there was another good opportunity. I didn't fail to take this opportunity, but I made kind of a mistake because I was too greedy. And when you are too greedy, you end up messing with your trades. So I was waiting for a target that was around this zone, and I will show you what that target was. So I took my sell trade here, I pushed my sell button, the price made this drop, and at some point I had something like around 20 points in profit, and my usually minimum target is 10 points, so this was the double of my minimum profit that I accept on every trade. But I was too greedy. I was looking for this level that I'm going to show you. What was this level here? I was too greedy. Instead, I put my stop loss at break even, and guess what happened? The price just came back up. It hit my stop loss, it closed my trade at break even, and then it went back down again. This is something that you never want to do, guys. When you want to catch a bigger move, when you want to catch some bigger move and you have some kind of target, there's one important rule that you need to follow. You need to survive the first pullback because the price moves up and down, up and down. And when it's on a downtrend, the up moves are smaller than the moves that it makes when it goes down. The up move is smaller than the move that makes to the downside. Most of the times I go just for one leg, so I kind of sell and then I wait for a lower lows and then I try to get as low as possible. And when this happens, so when the price starts to get very close to my minimum profit, I protect my trade with my putting my stop loss at break even. And was basically what I did here. The price already passed through my minimum profit that I use on DAX, which is 10 points minimum, and I put my stop loss at break even. But guess what? I was aiming for a bigger target. And since I was aiming for a bigger target, I shouldn't put my stop loss there at break even. This was my mistake this morning. I had fear and greed at the same time. I was greedy because I wanted a big target. I wanted to get to a lower zone that was far away from my entry point. But I had fear and I adjusted my stop loss where I shouldn't adjust. when you want to get to some kind of zone, some kind of resistance, when you have some target and you clearly see that the price is going there, what you do, you wait for the price to make the first pullback that happened here, and then you wait for the break of the previous low again, and that's when you can adjust your stop loss to break even. Well, I guess I had some kind of fear and I made the mistake of adjusting the stop loss where I shouldn't do that. Okay, but that's day trader's life. But I had another opportunity again. The market was very nice to me, and after closing my trade here, then we see the price coming back down again, and you see a green bar here that touched the moving average, and this green bar here was deleted by red, and here I hit my sell button again. And then I waited for a new low, waited for the price to go down, 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 and here was I got out with 20 points. My target was a little bit lower, but when I saw this red candle starting to move very quickly, what I usually do, I start trailing my position with my trailing stop. I use a manual trailing stop that I try to adapt to not get caught by the upticks when the price is going down, but sometimes it makes some upticks and you don't want to get caught by that. But I ended up getting caught here. My target was here, but okay, not very bad, not very bad. At least I didn't commit the same mistake like I did on my first trade. You can see that the price broke the previous low. I didn't set my stop loss when the price, sorry, I didn't set my break even when the price started going up again and making a second pullback. That's when it went down again. So I didn't have fear this time. I waited patiently for the price to start dropping again. And when it broke this last low here, that's when I set my stop loss at break even. And as the price started running here faster, I just started trailing my trade, which closed at this zone and gave me 20 points. So guys, why I was targeting this zone here? This is something that it's called ATR. And ATR stands for average true range. And what is the ATR? I use the daily ATR from the daily time frame, from D1 time frame, and I use a 7-period ATR. And a 7-period ATR on the daily average, it tells you the average size of the last 7 daily candles. And when you have the average size of 7 daily candles, you kind of know more or less how much an asset moves. In this case, I was trading DAX, but this is the same for any other index or any other stock or any other market that you trade. And how do I quickly know where is my target, where is my 100% ATR target? Well, that's easy because I'm a coding guy and I have an indicator that tells me everything. I have an indicator that you can see here that tells me the average true range of DAX, the average size of the last 7 daily candles, which in this case it's 158 points, but it's always changing day after day because the daily candles, they don't have always the same size, so this always adjusts day after day. But even better than that, look at this, look at this. I have a line here. My indicator draws me a line here. You see this line? This is 100% ATR line. And if I move it here to the left side, you can see that this is where the price started jumping. It touched it here and it jumped to the upside. It touched it here again and it jumped to the upside again. It touched it here again and it jumped to the upside. It touched again. It jumped to the upside. Then it broke, but it was a fake breakout and it went up again and it hold again on the same ATR 100% ATR level and price is starting to go up. So this line, it's something that it's very strong. It's like a strong support or a strong resistance. If the price goes to the upside, it's the same concept. But when you are aware of how much the market that you are trading already moved, and you know that it's more or less the average of the last 7 days, this is a good place to target and a good place to be careful about continuations of the trend. So, when the price reaches this 100% ATR, it tends to start or moving sideways like what it did here, but after that it can eventually even change the trend to the upside, but it also doesn't mean that it can't break it. The important thing here is that at the first time that the price reaches this zone, it will have some trouble to get over it, to break it. Eventually, later in the future, the price can come back to this line and break it to the downside. Eventually, if that happens, it's normal. If later, but not at the moment that it's trying to break it at the first time. So this is something that you always need to be very careful and that you need to be aware when you are trading. And this will help you a lot from taking trades that may be losses, from taking trades that are going against some kind of resistance or support. That it's how this actually works in practice. And when you use this concept, you can be sure that your accuracy will increase a lot and you will not tend to take trades that will most likely be a loser. And nobody wants to have losing trades. Or at least we want to minimize the most possible the losing trades that we have. So guys, this was my lesson from today. I hope that this helped you, that you liked what you learned and that you implement. And tell me in the comments if you are going to start to use this concept on your trading. And if you do, later you can let me know what were your results and if it worked well for you. Oh shoot, the US session is just opening. I have to go to my Discord chat room. So guys, I hope you liked the video. I hope you enjoyed. I hope you learned a lot. Don't forget to subscribe and hit that like button. And see you on the next video. Bye bye.